Hello students and welcome to another class of income tax with me Adela Samuel, Head Department of Accounting and Finance, St. Anne's Arts and Science College. In today's class we are going to see the different kinds of income that is present for calculating the tax for the Indian income. So we will start off with these two types of incomes. The first one is an Indian income. The second type is a foreign income. These are the two types that we are going to see for tax purpose. So when you take the first type of income, Indian income, we can say that any income that is received or deemed to be received in India, we call it as an Indian income. Received or it's going to be received. Deemed to be received means it's going to be received in the future. Inside India is called as Indian income. It can also mean accrued or arising in India. That means an income for which you have the work has been done inside India. So accrued means the work has been done inside India and it is going to arise out of an Indian work that is being done inside the country. We consider that as an Indian income. Then Indian income can also mean accrued outside but it is received in India. So you do the job outside but first you receive the money inside India, then we consider that as Indian income. The next type is the foreign income. Foreign income is referred to as any income that is earned outside the country. So when you say accrued outside from other sources, we consider that as an foreign income. Accrued means the job is done outside the country. Then accrued outside from a business which is controlled in India. The business is outside but it is controlled in India. That is also considered as a foreign income. Then you have accrued outside and first received outside India. So the job is going to be done outside the country as well as the amount is going to be received outside the country. We consider that as an Indian income, foreign income. So these are the two kinds of income for income tax purposes that you need to remember. Okay, now we are going to see something called as tax incidence or scope of total income. Tax incidence or total scope of total income. Okay, so as we have seen Indian income and foreign income, first we'll take the Indian income and we're going to divide it into ordinary resident, not ordinary resident and non-resident. So we've in the previous class we have seen who is a ordinary resident, who is a not ordinary resident and who is a non-resident. So you know the difference between these three types of residencies. Okay, so the first thing that we need to see here is the Indian income. So what is the source of income? Suppose if income that is received or deemed to be received in India in the previous year, you are earning some money received in India in the previous year, it's going to be taxable for all the three types of people living in the country. Like a non-ordinary resident, it will be taxed. For a not ordinary resident, it will be taxed. And for a non-resident also, any income that is received inside the country, received in India, will be taxed. The second type of Indian income is the income accrued or arising or deemed to accrue or arise in India. That is, you are done the work here and it's going to arise inside the country. So if you've done the job here and you're expecting some kind of a salary or an income to be earned in the country, inside India, it's going to be taxed for all the three people. Okay, so that is the second type. Then the third type is income accruing or arising or deemed to accrue or arise outside the country, but first it is going to be received in India. So again, it's going to be considered as an Indian income. So when you say it's an Indian income, it's going to be taxed for all three types of residents: ordinary, not ordinary and non-resident. So if a person has done the job outside the country and the amount is going to arise outside the country, but it is going to be received first in India, then it is considered as an Indian income. It is taxed for all the three. So these are the three things that is considered under an Indian income. Now moving to the foreign income, first you have to find out whether it's a foreign income or an Indian income and then put it in the three columns. So if it's a foreign income, first type is income accruing or arising or deemed to accrue or arise outside India but first received receipt is also outside the country, then we consider it as a foreign income. If it is received inside India, it is called as a Indian income. Now they are saying are accruing, arising outside the country, and it is received also outside the country. So obviously it is a foreign income. Then in that case, it's going to be taxed only for ordinary resident, and it's not going to be taxed for a not ordinary and non-resident. They will not be taxed for that money. Second type of foreign income is income accruing or arising outside India from a business or a profession that is controlled from India. So the business is outside, set up outside India, the business job, everything is being done outside the country. But the control alone is from India. So it is a foreign income, but the control is in India. So in that case, and if it's a business or a profession, in that case, ordinary resident and not ordinary resident will be taxed. The non-resident will not be taxed. The third type of foreign income is income accruing or arising outside India from any source other than business or profession controlled from India. So the owner will be inside India, and it is not business or profession that he is running, but it is some income is arising outside the country. For example, it can be a land that you own outside the country and you're getting a rent, or it's some agriculture that is there, agricultural land that is present outside the country, and you're earning something from a foreign country. In that case, it's not a business, it's not a profession, still it's controlled in India. Some other source other than business or profession, it's a foreign income, then it is going to be taxable for ordinary residents alone. It will not be taxable for not ordinary resident and non-residents. So first, when you see the question, you have to determine whether it's an Indian income or a foreign income. Then you will have to put it to tax for whoever is going to be taxed, whether it's a ordinary, not ordinary, or non-resident. That is the meaning of the term tax incidence or scope of total income. Okay, now we are going to take a few simple problems and see how each amount of income that is earned by people will be put to tax under this concept. So first we'll start with the first sum. I'll read the sum to you and then I'll explain the solution in the next slide. Mr. Rajavel, a non-resident in India, earns the following in the previous year. First one, income from business in India received outside India, rupees 63,400. Second, income from business in Sri Lanka controlled partly from Sri Lanka and partly in India, rupees 43,400. Technical fees received from an Indian company in Germany for advice given by him in respect of a project situated in Iran, rupees 23,500. Royalty received outside India from Government of India, rupees 16,400. So when you come to the solution, first you'll have to write the heading as computation of taxable income of Mr. Rajavel, and the sum specifically it says non-resident for the assessment year 2020-21. So we are going to do the column only for a non-resident. So resident and ordinary resident is not going to be calculated in this sum. Okay, so first one, the first question, first point was income from business deemed to arise in India. The amount is given to you. So the according to the tax specification, we can say that income from business is deemed or arising inside India. So it is an Indian income and hence it is going to be taxable for all the three assessees. So for a non-resident also we are going to tax it. Second point, income from business in Sri Lanka, but it is controlled partially by Sri Lanka and partially by India. Hence it is taxable only for a ordinary resident. So it is a business. So business and it is in Sri Lanka. So as I told you, the second point in foreign income, it is a foreign income. In the second point we studied that any business or profession that is carried out outside the country and it is controlled in India, it is taxable only for the ordinary resident. So for a non-resident, it is not taxable. So in this sum, Mr. Rajavel is a non-resident, so it's not taxable, so you put a dash. Third point is technical fee received in Germany is a foreign income. Okay, so it's a technical fee that he is doing, which is situated in Germany, and the company is an Iran company. So everything is outside the country. He is receiving an income, and it is going to be taxable only for a ordinary resident and a not ordinary resident. But in this case, this person is a non-resident, so we put a dash against this particular concept. The fourth one is royalty from Government of India is received by this person. So we can say that it is deemed or it is accruing and arising inside India. So it's an Indian income. So obviously for all the three people it's going to be taxed. So 16,400 is taxed for a non-resident also. So based on whether it is an Indian income or a foreign income, and based on the situation, we have to determine whether it's going to be taxable for a non-resident. So if it is taxable for a non-resident, we put it in the column. If it is not, we put a dash. Then if you add the amount column, whatever you get is the gross total income of this person. That's how you wind up the sum. Now we'll go to the second sum. Following are the incomes of Mr. Sasi Kumar for the previous year 2019-20. Calculate the taxable income on the assumption that he is a ordinary resident, not ordinary resident, and a non-resident. So all the three residential status they are asking you to calculate. The first one is profits from business carried from Hyderabad rupees 50,000. Income accrued in India but received in Hong Kong rupees 75,000. Past untaxed income brought into India during the previous year rupees 42,000. Income from house property situated in Sri Lanka during the previous year 2019-20. Income from agriculture is rupees 1 lakh. So all these are given to you. Okay, now coming to the solution. First you start off with the heading computation of taxable income of Mr. Sasi Kumar for the assessment year 2020-21. So in this sum, they are requesting you to do the sum for all the three types of residents. So first column will be particular, second one resident, third one is not ordinary resident, and the next one will be non-resident. So you take the first type of income, which says profits from business carried from Hyderabad rupees 50,000. So the profit is coming from a business conducted inside the country. So obviously it is going to be taxed for all the three types of residents. So you put it in all the three columns. The second one is income accrued in India but received in Hong Kong. So on an accrual basis, income is accrued inside India, whether it's received in India or outside India. The income is going to be accrued in India, and therefore the amount will be taxed. It is considered as an Indian income, and the amount will be taxed for all the three people: resident, not ordinary, and non-resident. Third thing that they say is past untaxed income which is brought into India from another previous year is 42,000. So a past income will not be taxed in this year's income at all. So unless it is an income that is arising in the previous year 2019-20, it will be taxed in the assessment year 2020-21. So it's a past untaxed income which you need not do anything, just ignore it in all these sums. So you put a dash for all the three residents. The fourth one is income from house property. It is situated in Sri Lanka. So because Sri Lanka is a foreign country, we treat it as a foreign income. It is not a business or a profession, it's a income from something else, income from other sources. And so we consider it as a foreign income, and it will be taxable only for a resident. So we put 48,000 only in the resident column. Other two columns you put a dash. Fifth one is income from agriculture in USA. Again, this is also an income from other sources. It's not from profession or business, and it is coming from a foreign country. It will be taxed only for a resident. So you under the resident column you put 1 lakh. For the other two columns you put a dash. Then you add up the gross total income will be different for all the three non-residents. So for the residents it is 2,73,000. For a not ordinary 1,25,000, and for a non-resident it is 1,25,000. And this slide there are some of the hints given for the problem 2. So the first one, it says it's like a brush up of what we had done in the sum. Profit from business carried from Hyderabad is an income earned and received inside India. Hence it is taxable for all the three. It is an Indian income. Income accrued in India irrespective of the place of receipt. It is taxable in hands of all the three because it is accruing, arising in India. Past untaxed income, it's not going to be considered for this year, so you can ignore it. Income of house property earned and received in Sri Lanka, whether remitted in India or not, is taxable only in the hands of the resident because it is a foreign income. And again, income from agriculture earned in USA also, it is a foreign income and hence it is taxed only for the resident. The third problem is, following are the incomes of Mr. Giri for the previous year 1920. Calculate the taxable income on the assumption that he is a ordinary, not ordinary and a non-resident. So again for all the three they are asking. Profits on sale of machinery in Bangalore but received in Australia rupees 30,000. Profits from business in Canada, the business being controlled from India. 1/3 is received in India, rupees 42,000. That means 1/3 is received in India, remaining 2/3 is received outside. Okay. Then the third one is income from house property in Iran, rupees 20,000. Agricultural income from England received there but later brought into India is 8,000. Past untaxed foreign income brought inside India is 6,000. Now we go to the solution. First you start off with the heading computation of income, taxable income of Mr. Giri for the assessment year 2020-21. So again, as usual, you have 4 columns: particulars, resident, not ordinary and non-resident, because you're asking you to do it for all the three. So the first point is, it says profit on sale of machinery in Bangalore but received in Australia. Because the thing is happening inside our country, accrual is happening inside India, we take it as an Indian income and hence it is charged for all the three SSCs, for resident, not ordinary and non-resident. Because the profit on sale is happening in Bangalore, we are considering it as an Indian income. Second one, profit from business in Canada, but 1/3 is received in India and the remaining is received outside and it is controlled from India. So although it's a foreign income, we can say that 1/3 of the income is 1/3 of the income is received in India. So on the receipt basis, we are going to give it for all the three SSCs, for a resident, not ordinary and non-resident. It is received in India. On receipt basis inside India, we consider 1/3 as an Indian income. So for all the three, it is taxed. But the remaining 2/3, that is 28,000 or 42,000 to 14,000 is a 1/3. So you give it for all the three. So out of 42,000, remaining 2/3 is going to be 28,000. Now this 28,000 is a profit that is going to be taxed only for a resident and not ordinary resident. Okay, for a non-resident it will not be taxed because it is received and it is a business is running outside the country. It is a foreign income. So only for resident and not ordinary resident it will be taxed inside the country. Now next one is the income from house property in Iran. So it's a income that is earned in Iran and is not a business or a profession. So it's going to be taxed as a foreign income only for a resident. And for the other two, it's going to be nothing. Next one is agricultural income from England. Again, England is a foreign country and so agricultural income is a foreign country for this particular SSC and it's going to be taxable only for a resident. Since it is an other source, it's not a profession or a business, it's another source, it's going to be taxable only for a resident. And they also say it is brought into India afterwards, but that is not going to be considered here. It is a foreign income earned and accrued outside India and received outside India also. So it's only for a resident we are going to tax it. Then the last one is past untaxed foreign income brought into India. As I told you in the previous sum, untaxed income, past untaxed income should be ignored because we are going to do only for this previous year 2019-20, which is going to be calculated in this assessment year 2020-21. Past untaxed foreign income or any income will be ignored. Then at the end, the gross total income will be the total of all the three columns. That will be your solution. So the hints that is given to you will be first one, profit on sale of machinery is deemed to be accrued in India, hence it is taxable for all three. Second point, as we said, 1/3 profit from business in Canada is controlled by India, so it is taxable for all three on a receipt basis, and the remaining 2/3 will be taxable for a ordinary and not ordinary resident as a foreign income. Income from house property earned and received in Iran, whether it's coming to India or not, it's a foreign income, and so we are taxing it for the resident alone. Then income from agriculture earned and received in England, again that is also is a foreign income, so taxed only for a resident. The last one, past untaxed income will not be taxed for anybody. So this is the solution for the third problem that we have seen. Thank you students for listening. I hope you've understood this tax incident and scope of income. First, please understand in the sum you have to figure out which is an Indian income, which is a foreign income. And then you have to consider the 3 points under Indian income and the 3 points under foreign income. Then it will become very easy for you to put it in those columns. So for practice, I will send you some more sums. You go through it with the solutions. If you need, I will send it to you. Please go through it, and if you have any doubts, you can anyway get back to me. So thank you for sitting patiently through the video, and please learn it up. I will send you the notes in the next class. Thank you students.